I think many people go down that they kind of just make the mistake. It's a cognitive kind of, it's just another payments technology. Okay, Bitcoin, it's just C++ code, right? You can replicate it. Like what it doesn't have any value. It's sort of thing. It's open source. You can copy it. But that's just completely missing the point. And there's so much more. It's like the code is maybe 5 or 10% of what makes Bitcoin Bitcoin. It's the consensus. It is the incentive structure and design. It's the game theory. It's the 17-year history that comes together, network effects, the Lindy effect, the 10x improvement rule. All these forces come together to make Bitcoin, Bitcoin.
Vijay, it is great to have you on the show. How are you doing?
Hey, Jordan. Thanks for having me on. I've been looking forward to this. So yeah, very excited.
Likewise. We met for the first time actually at the BSE conference in Bury, which was a great conference. And congrats to the organizers for putting that on. And it was great to meet yourself in real life as well.
Yeah, likewise. No, I thought it was a great conference. I wasn't expecting the small little town in the English countryside to have so many Bitcoin maximalists. It was quite surprising, but also really, really good. Good setting, good set of people, some really interesting panels. Yeah.
That's what Bitcoin does. It takes you to places that you would never really go. Because I would never have a reason to go to Bury, St. Edmunds. And it took me there and I loved it.
Oh, and I didn't know that such a place existed until I heard about the conference. So there you go.
Awesome. All right. Well, let's get into it. So you are a corporate lawyer. You're now one of the leading voices in Bitcoin, I would say. And you've also authored, I would say this is my opinion, because you've authored The Principles of Bitcoin. But before we get into that, and I've got the book here for everyone to see it. Before we get into all of that, let's go pre-Bitcoin. Could you tell us a little bit about your background, and we'll dive into this before we hit on everything Bitcoin.
So I've been a lawyer in the financial services industry for over 20 years. I started off in London at a firm called Freshfields. That was in 2004. Worked there a little while. Then I moved to the US and qualified as an attorney in New York. And then I joined another firm, Davis Polk, in New York, on Wall Street, in the midst of the financial crisis. That was 2008, just a few weeks after Lehman went under. And I worked on some of those bailout packages. I did Morgan Stanley's TARP, Troubled Asset Repurchase Program, which was the first on the market. So I was really embroiled in that whole saga. And it was an amazing experience to have at that very early stage of my career, because it really shaped my outlook and the way I saw the markets, the way I saw the industry, and just kind of the world generally. So that was 2008, and then I moved from there to Goldman Sachs in New York, and I spent about 11 years at Goldman in the US, and then I moved out to Hong Kong and then Singapore. So in terms of and so right now I work at Gemini, the crypto exchange founded by the Winklevoss twins. So I'm international general counsel there, advising on regulatory matters and so on. In terms of my Bitcoin journey, I think that began when I first heard about Bitcoin in 2013. Obviously, rejected it the same way.
Most of us did.
Yeah, most of us, clearly those from a traditional finance background, is no intrinsic value, no fundamental value. It's a Ponzi scheme, all of that sort of stuff. And then it took many years of just revisiting it, rejecting it, then revisiting it, and then and then really studying it and going down the rabbit hole. And then, yeah, and I think it was in 2020 that I thought I'd write a book. I wanted to write something on it. I wrote a paper on Bitcoin, which is still around. You can find it. It's called Bitcoin, Not Crypto. It's on the SSR.
I didn't know that. I'm gonna go and read that.
Yeah, I wrote that in 2020. I don't know. I feel like not many people were using. I know Bitcoin, not crypto, is very commonly used on social media right now. I feel like not many. So I'm not going to say I came up with Bitcoin, not crypto, but it wasn't around that much when I wrote it, and I felt quite clever about the title and so on. Anyway, so that was 2020, and then I wanted to write more about it, and so I started writing, on this idea that you have to understand Bitcoin holistically. If you look at it in a silo, you're going to miss the big picture. So that was kind of my because I saw some people from, the financial world who were only focused on its volatility or its store of value properties, and they miss the censorship resistant aspect of it, the permissionlessness aspect of it, and how it's a lifeline for people living in authoritarian states. So you miss the political side, and if you focus on that, but don't think about monetary history and so on, or where Bitcoin gets its scarcity from in terms of its technology, then you miss all these different facets. You have to look at it as a whole. So I started writing a paper, and then it just turned into a book. I never intended to write a book, but 320 pages later, it was a book. I was quite lucky to get Alex Gladstein to agree to write the foreword, and of course Columbia University Press, sort of big Ivy League university press, to agree to publish it. So yeah, it's worked out quite well.
It's so funny that it started off as a paper and just evolved into a book, because I think a lot of people who write books don't intend on necessarily doing it. It's just the culmination of their thoughts and ideas that they've been putting down, because I've been doing that for such a long time, of the things I like, the ideas that I like, and just writing them down. And then at some point I will pull them all together into something. But I want to go back. There's so much I've just written down whilst you were talking there. And I want to go back to the 2000 and where you were working in the 2008 financial crash, because I find that really interesting. Actually, you working on the bailouts around that time, and can you dive into that a little bit more of what was the sentiment around that time, and within internally, but then also one of the questions that popped up for me is I know you've said you became a gold bug at some point. Was it off the back of this?
Yeah, 100%. So going through that, I would say its biggest impact was, the realization that, just the systemic manipulation and the moral hazard that is innate to the traditional financial system was laid out in a very stark manner to me when I went through that. It was unmissable. You could not miss it. You could see the bailout packages being put together, and meanwhile, the Federal Reserve obviously propping up, institutions that normally should have gone bust. In a world where it's survival of the fittest, which is what a free market is. It was pretty clear that we were in anything but a free market. It was a completely controlled system, a completely contrived system, with people sitting at the helm wielding all the discretion around it, right? Namely, the people who control the money, that's the Federal Reserve, right? So on the back of that, I became a gold bug, absolutely. And I watched people like John Paulson become billionaires. If you look at his history, he made billions of dollars by betting on gold and I think shorting the markets during that period. So I decided to do that. I got into gold, but then the following decade was not a great decade for gold. It just stayed pretty much flat to down. Equities went through the roof and everything else. It was just not a good period. But all that is to say that I basically got I got the joke back then. Like I understood it. I understood the problem. And I thought gold was the solution. I think it probably is to a large degree. But for me, it was just understanding the leap was just understanding digital gold. So from gold to digital gold. I think I talked about this at BSc, and I think many gold bugs are, I feel like that's the easiest path to get into Bitcoin because, I've always believed that you have to understand the problem in order to appreciate the solution. So if you don't get the problem, then the solution is going to be meaningless to you. Like, why do you care about scarce money? If inflation is not a problem to you, then you're not going to care about scarcity in money, right? If you're not living in an authoritarian state where the financial system is weaponized against you, you're not going to care about censorship-resistant money, right? If you're banked and you're not like one of the 25% of the world that's unbanked, you're not going to worry about permissionless banking. So you don't appreciate the solution, right? So being a gold bug, you kind of you can assume that the person has like understands, they're familiar with the Nixon shock, they're familiar with Bretton Woods and all of that, they're familiar with the gold standard and fiat and inflation. And so I've always thought that's a nice part. So then you just need to understand, okay, why did gold fail? Why didn't it succeed? Is because of its shortcomings with respect to portability, divisibility, verifiability. That's why paper money was introduced. But now, if you've solved those problems, then you don't need, fiat anymore. You can just have digital gold, which is Bitcoin, right? So yeah. Anyway, sorry. To answer your question, I did. I think the 2008 crisis definitely made me a gold bug, and that was, I would say, ultimately turned out to be my path into.
A lot of people struggle with that jump from gold to Bitcoin still. There's a lot of people, and so I post a lot on LinkedIn because I try and get outside the echo chamber, and by doing that, I get a lot of hate comments on it, which I really like because it's then people challenging, and it shows that I'm getting out to the right audience. But one of the ones this week, and probably every week I get, is there's no intrinsic value. So how do you go out, because you've gone from that gold to Bitcoin? How do you battle this?
How do you answer that question?
Yeah.
So here's how I would answer it. Firstly, you ask what gives gold its value, right? It's not the fact that you can make jewelry with it, right? It's not that you can use it for some science experiments or something like that. The vast majority of gold just sits in a vault in London or New York or Toronto, right? It's dug out of the ground. It's processed, goes through refining, and it goes into a vault, and nobody sees it for decades or maybe hundreds of years, right? So why does it have value? It's because of social consensus. It's because people agree that it has value, but that's in turn driven by its scarcity, right? And these monetary properties that Karl Menger talked about, the father of Austrian economics, talked about the properties that are the different attributes of money, which is scarcity, portability, divisibility, verifiability, fungibility, right? History, durability, and so on. So gold it was the best asset in terms of when assessed on all of these attributes. it was the best. It has been the best performing, commodity over the last 8,000 years, and therefore it acquired that kind of intrinsic value, it kind of consensus as to what value it should have. It should command in society, right? Now, if you take the same metrics and evaluate Bitcoin, it's as good or better than gold on every metric, except perhaps history. But obviously, anything that disrupts an incumbent obviously has a shorter history than the incumbent by definition. So you can't fault Bitcoin for that. But on every other property, Bitcoin is superior to gold, except maybe fungibility. Right? Fungibility is shit. Bitcoin's only kind of little shortcoming. But other than that, it vastly exceeds, or it's far superior to gold. So when you compare it and hold it like side by side with gold, ask yourself, why does gold have value? And then you do the same analysis for Bitcoin. It's very easy to explain, that kind of intrinsic value. But the other thing is it's like Bitcoin is not just code, right? I think many people go down that they kind of just make the mistake. It's a cognitive it's just another payments technology. Okay, Bitcoin, it's just C++ code, right? You can replicate it. Like it doesn't have any value. It's sort of thing. It's open source. You can copy it. But that's just completely missing the point. And is so much more. It's like the code is maybe 5 or 10% of what makes Bitcoin Bitcoin. It's the consensus. It is the incentive structure and design. It's the game theory. It's the 17-year history that comes together, network effects, the Lindy effect, the 10x improvement rule. All these forces come together to make Bitcoin, Bitcoin. Bitcoin is, again, it's not just C++ code. It is 100,000 nodes. It is 1 million plus mining machines around the world. It is billions of dollars of mining equipment that's been distributed around the world, and $2.5 trillion of humanity's wealth that's stored within it. That is path dependent. You can't just replicate it like that, and that in and of itself is what gives it its intrinsic value. I mean, that's my best shot at it. I mean, people come at it because, particularly people from TradFi, you can't blame them, because you're taught, if you do your CFA or you do an MBA or something, you do discounted cash flow analysis, your revenue multiples. You look at what is the cash flow for the business, what is the P&L, what's the burn rate, and all these things. You're used to thinking about things that the words intrinsic value derive from the valuation methodology of a company that produces a revenue stream, right? And so they come at it with that kind of framework and that mindset, but it doesn't. You're trying to fit a square peg in a round hole. It's not how you should be thinking about this. It's a wrong mental model.
So true. And like going on, like how Bitcoin is different. What was your? I'm going to read it after, but I'd like a little summary of Bitcoin, not crypto. Like, what was that article laying out? And did you go through a period of crypto, or did you just jump straight from gold to Bitcoin?
No, actually, I'm quite fortunate that I skipped the crypto thing. I just had I think, and I owe a lot to Twitter, particularly the old Twitter, not the new Twitter. And the Twitter of 2019 and 2020, when there was some really great people on there. I mean, GG was on there, Bitstein, Michael Goldstein was on there. And Saif Dean as well posted a lot of really, I think he still does, but he posted more back then. Robert Breedlove also used to post some really good stuff. These guys actually, I just follow the right people like very early on. And of course, Trace Mayer, really, I'm going way back, like 2017 and so on. So I was quite fortunate to find, the right kind of teachers in that sense, and not go down the road. But look, I mean, I'm not gonna, I don't want to crypto, because stable coins came out of crypto. There's other utilities or whatever. All I'm saying is that they are fundamentally different. There's only one candidate for this idea of disrupting monetary policy and central banking, and that is Bitcoin. Or another way to look at it is there's only one that offers a real assurance on absolute scarcity. Nothing else does. Most of them, Ethereum doesn't even have a supply cap, right? Nobody knows what it is. They've changed it like a dozen times. There are some that claim to have a supply cap, but then they're very centralized and they can change it if they want. They've changed it before, they can change it again. So it's only Bitcoin that gives you that kind of supply cap. So yeah, but in my paper, I basically talked about that. I talked about what, so where does that supply cap assurance come from, right? You need to really, in order to trust that it's 21 million, you have to understand why it's 21 million. You shouldn't just say, oh, okay, Bitcoin's capped at 21 million, but really? You need to understand why. And that takes a lot of study. It takes hundreds of hours of trying to understand how those incentives actually come together, right? So my paper was essentially going into that and talking about how Bitcoin's creation of digital scarcity is a path-dependent one-time invention. It's not possible to replicate it. So that was the core of that paper. However, I mean, there's in my book there's a chapter titled "Once in History Invention," and that goes back to my paper, but really builds on it. So if you read the book, if you read that chapter, you'll get everything basically that was in the paper.
Amazing. And let's flip on to the book then, because you come at it through tech, economics, politics, and philosophy. And can you just explain a little bit about why these four? Because a lot of people, as we've been talking about, Bitcoin is such a hard thing to distill down into something that you can articulate or write about. Why did you pick these four things?
So, I mean, the main idea was that it should be a multidisciplinary analysis, and you can't look at it in silo. That was the main point. But I say in the book that this is just a start. I mean, I just picked these four because I thought that it was just my four buckets. But you could equally have had, game theory as a whole chapter. You could have had quantitative finance as a whole chapter. You could have even had theology as a whole chapter. People who talk about, the theological aspects of Bitcoin, right? There's no limit to the number of fields that you could analyze Bitcoin from. I picked these because I thought that they were the most powerful, at least in my journey. Like you kind of, you have to understand technology to understand Bitcoin's robustness and where the incentives come from and why is it censorship resistant? Why is it unconfiscatable? Why is it permissionless? Why is it absolutely scarce? That derives from technology and incentives around it, but at its core, it's technology. It's a technological design of it. You need to understand that. Why is it relevant as a money? You need to understand monetary history, right? You need to understand the Nixon shock. You need to understand inflation and free markets and a bit of Austrian economics and so on. So I did talk about that. If you just focus on those, then you completely miss its relevance for 80% of the world living under some form of authoritarian regime. So you need to talk about politics, you need to talk about the unbanked, you need to talk about the idea, can governments really shut it down? Like, what does it take to shut down Bitcoin? So I thought politics was relevant. And then you just have to understand the philosophy. You have to understand, the consumeristic mindset that has arisen I believe, as a direct result of Keynesian economics and this, debt-driven growth at all costs, bridges to nowhere phenomenon driven by debt just to keep the hamster wheel running, right? So you have to philosophically understand what it means to be on a hard money standard where you're not spending the future today, but rather you're saving for the future, that kind of mindset switch is actually it's a philosophical view, and being more of a stoic mindset rather than just consumeristic, which I think again is a trait of many like real Bitcoiners. You don't see it with the Lamborghini driving influencers, but with whatever new like tutorials or academy this and academy that and so on. But the real Bitcoiners, they lead really stoic lives. It's pretty impressive. So yeah, that's philosophy. So I just try to stitch it all together, but it's by no means comprehensive. It's just a start.
Yeah, and I like that you've approached it from like first principles as well, and the importance of this, and like because that's a thing that I see in society today, especially, is like, oh, that's just the way it is. That's the way it's always been. And yeah, can you talk about like the importance of first principles with Bitcoin?
Completely. I mean, I think it's actually, by the way, so my book was originally named Bitcoin in First Principles.
And then, I did think it might have been.
That was the title, even when I submitted it to the publishers. And then I got a lot of pushback because first principles is actually a concept in philosophy, and it's like, there was this very puritanical view, and there was like lots of back and forth. I finally said, like, give up. I'll just call it principles of Bitcoin. But yeah, I mean, I think it's the most important thing, and it's the thing that's missing the most as well in today's perspectives on Bitcoin, and I think one of the main reasons for that, I would attribute most blame to is crypto, because crypto confuses it. People come into this space and all of a sudden they're all NFTs or Bored Apes, and then tokenization this, tokenization that, programmable money, and NFTs and metaverse and Web3 and all these kind of things. And before you know it, they've completely confused themselves, and they end up buying some shitcoin and getting rubbed. That's unfortunately the most common path that most people go down. So that's why my whole idea was stop and just take all of that jargon out of the picture. Take all these words out completely. Take blockchain out. Don't talk about blockchain at all. And just ask yourself, what was the fundamental core innovation of Bitcoin? Why are we talking about it? My first chapter is entitled, Why Are We Talking About This? Like, just stop and ask. It's amazing. I work in this industry, and I would say 99% of people, if you ask them, why are we talking about this? They don't have an answer. I mean, I'm talking about crypto people in crypto, right? They can't really answer that. They throw out a lot of jargon, but they won't be able to tell you. And the answer to that is, it was the invention of a digital bearer asset, period. Again, those words as well, people have just used so much that they don't even ask, what is digital and bearer, right? It's an oxymoron almost. They're not supposed to go together, because digital is ones and zeros. It's information. Bearer is something physical. So how can ones and zeros be physical? That's literally what you say when you use the words digital bearer asset. You're saying that a physical object, or ones and zeros, is somehow physical. That's what you're saying. But people don't get that. Like, they just glossed over it and gone on to Web3, right? So stop and ask that question. And that's what Satoshi achieved, right? He enabled, and this is why I love Gigi, because Gigi, I think, was one of the best first principles thinkers. And he says, Bitcoin enabled the laws of physics to operate in the digital world. Right? So if I give you this pen, you take it and you walk away, I cannot give the same pen to somebody else. I cannot double spend this pen because the laws of physics prevent the pen from existing in more than one place at the same time. And so you can have a peer-to-peer transaction. I can give it to you, and you walk away knowing 100% that I cannot give that same pen to somebody else and double spend it. If you're dealing in ones and zeros, you can't do that because you can give a digital photo. I can send you a digital photo, which is ones and zeros, and send the same digital photo to 1,000 other people instantly, right? So you need a trusted third party there to make sure that I'm not doing that, or keeping a ledger saying that Vijay no longer has this thing, and so debit Vijay's account and credit Jordan's account, right? But what Bitcoin achieved was literally this physical transaction, but in the ones and zeros space, right? That is path-breaking, paradigm-shifting. It's one of the humanity's greatest inventions, right? But most people don't see that, and that's why that kind of first principles thinking is where you need to, kind of start from to get it.
It's funny that you say that of around like the jargon in cryptocurrency in general, because like I don't know if you know this, but before the Bitcoin Collective, it was called the Crypto Standard, and I was into cryptocurrency, but then I started to question all of that and ask myself, why am I in all these cryptocurrencies? Like, what's the real reason? And actually looking into that. And once I'd analyzed everything, I was like, well, Bitcoin's the only one that I should actually be holding. And it was such like an eye-opening experience, but I done a lot more research at that time as well. Like, I think that's the big thing is I'd probably taken too much like influence from people online, and not actually done that research for myself, and actually looked into what Bitcoin was, why it was here, like why it was created. But the big thing for me was history, and actually looking back in history. I always say the fourth turning, the book, The Fourth Turning, was actually the thing that tipped me over the edge. Nothing to do with Bitcoin, but it was okay, let's zoom out. Let's look at the cycles we go through. I find the characteristics of generations very interesting as well. But it was just that it was super interesting to actually be able to then zoom out. And I think you're right in a lot of people don't actually approach Bitcoin in the right way necessarily at the start, and looking at it through first principles and then doing your own research. Because let's be honest, it's hard to do the research. There's a lot of research you have to put in because there's so many different avenues that you can go down.
Yeah.
When you said that, I was like, shit, that's me, or that was me.
No, I mean, it's hard, and it's hard to find the right resources as well. There are only a few books, actually, surprisingly. There's like, you go on Amazon, there's hundreds of books there on Bitcoin, maybe thousands even, I don't know, but there's definitely under 10 books that are actually really, really good. So yeah, you have to find the right one and then understand it, and it's not easy. That's why I think it's going to be a long journey. I mean, it's, I've had this conversation a few times with different people. Actually, like Richard Byworth and I talk about this. Like, how many people do you think really, really understand Bitcoin? And I know people say, oh, we're at like a 2% adoption rate, 2% of the world, has Bitcoin. We are nowhere. I would say there's probably less than 10,000 people, I think, who really get, right? Not just believe in it because it scares, but get it holistically and really, really get it. I would say it's less than 10,000 people. So, for a global asset there, you got 8 billion people to go. Yeah.
Do you think that we will actually get over the, let's just say, 10% mark of people understanding it? Just because if you look at today's society, and if you ask anyone on the street, how does our money work? They wouldn't be able to answer it. Or the vast majority wouldn't. I'd be very surprised if someone gives me like a top quality answer. So do you think that we will actually live in a world where, say, more than, I don't know, 20, 30% actually understand Bitcoin?
It's far less than that. I mean, it's going to be, most people are followers. Right? I mean, COVID should have taught us that, right? People are sheep by and large. And there's this meme I've seen on Twitter. I think it's a bit hyperbolic, but says you don't have to waken all the sheep. You just have to waken the lions among the sheep or something like that. It's a bit over the top, but but you get the point, right? It's a few people that need to understand it, and then the vast majority of people will just follow them. Like each of these followers will have like, oh, I trust that guy, or he's doing it, so I'm going to do it too, right? That's unfortunately the vast majority of the world. I would say it's probably 90% of the world is like that. And then maybe another 5% is people who are some degree of that, along with a little bit of independent work. And I would think that less than 5% of the world are actually independent, original thinkers. And so I think it's just those people who need to get it.
Yeah, that's interesting you say that, because that's one of the reasons why we're at the Bitcoin Collective, we like pivoted more towards businesses understanding Bitcoin. Because like if you actually look at the world, it's like people trust brands and people trust businesses and institutions. They've got loyalty to all of these. So we then changed tack to be like, okay, well, let's educate these people on what Bitcoin is. And that will then have ripple effects, shockwaves throughout society, because people will look and see, oh, okay, if they're doing it, then maybe I should be looking into it. And I mean, the ETF in America was a prime example of that. People looking to what they perceive as trusted institutions, in like your BlackRocks, your Fidelities, you name it, and saying, oh, okay, well, they must have done their due diligence on this thing. Maybe it is credible.
Yeah. You just need that gateway into it. And then, like, I mean, that's why I have no problems with ETFs. I know it's just paper Bitcoin and all of that and so on, but something's better than nothing. Like, so there are many ETFs have onboarded many people into the Bitcoin space who would not have been in it if not for ETFs, right? So that's a great start. I mean, so you get in. Maybe you bought some of the BlackRock ETF when Bitcoin was at, I don't know, $50,000. Now you more than double your money. So you're going to be thinking, oh wow, this has been my best performing asset. Let me read more about it. Let me learn more about it. So you start going down that rabbit hole. And then maybe you end up selling your IBIT and moving the money into cold storage Bitcoin. And that's your path, right? The important thing is to get people interested in thinking about it. And I think, ETFs, paper Bitcoin, all of that is serving that purpose.
Yeah. And another, like, I've talked about this quite a lot on like the podcast and like on our town halls that we run as well, is I'm seeing a lot of people from the Bitcoin Treasury companies I'm witnessing it, like people from traditional finance, getting interested in these treasury companies. Like, what is happening? Like, why are they so volatile? And what is this new model? So they're having to learn about that, but then it's actually bringing people back around full circle, because then they're like, oh, well, they're accumulating a lot of Bitcoin. So I'm investing in this company that is just stacking loads of Bitcoin, or they've got a strategy to do so. I better research what that underlying value or what that underlying asset is. yeah, what's your thoughts on the whole like Bitcoin Treasury movement and where it might go, all of that?
Yeah, I mean, it's again, you should again once again asking us first principles, like why are you doing BTC-TCs, right? What's the thesis there? Or in other words, I think a good way to think about it is, if you had a bunch of money, would you buy Bitcoin with it, or would you buy a Bitcoin treasury company? What's the reason to not buy Bitcoin and buy a Bitcoin treasury company? And I would say, look, I mean, you should. My personal advice would be, you should at least be 80% in Bitcoin, and then maybe the 20% of your Bitcoin exposure, you have it in Bitcoin treasury companies. Would not advocate people selling all their Bitcoin and buying BTC-TCs. That's just the wrong. Even though I'm now quite involved in Bitcoin treasury companies with, XE and another one. I do not advise that people do that. So what is the thesis? The thesis is that you can buy Bitcoin, right? But one of the biggest complaints about Bitcoin is that it doesn't generate yield. If you bought a Bitcoin 5 years ago, it's still one Bitcoin. It's just sitting there in your Trezor or your cold card or whatever. It's just there. Okay. How do you get yield on it? So the Bitcoin treasury company is basically trying to solve that problem. So if let's just say hypothetically, you have $100,000. I'm just putting a number there because Bitcoin is around that right now. So you could buy a Bitcoin with that, okay? Or you can buy a Bitcoin treasury company. Let's just say hypothetically, MSTR is trading at MNAV of 2. It's much less now, but let's just say 2, right? When you buy MSTR with $100,000, you're good at getting only half the amount of Bitcoin because it's at an MNAV 2. So you're paying a massive premium for that Bitcoin that you just acquired. But that premium that you're paying is essentially the upfront cost for the right to generate or to earn a yield on that Bitcoin into perpetuity. So as long as you hold MSTR stock, MicroStrategy and Michael Thaler and all these people are going to be doing everything they can to increase the amount of that Bitcoin. You started off at half a Bitcoin equivalent, whatever. You're gonna have that increase to 0.75, 1 Bitcoin, and then hopefully 1.2 Bitcoin, 1.5, 2 Bitcoin, and so on. That is the story. That's a thesis. I'm not saying it's going to happen. It might not. Depends on the company you choose. But that's why you're doing it. So when you make that decision to do that, you have to analyze the management team. So essentially, you're betting that this company is going to utilize different financial instruments and tools that aren't available to me as an individual retail investor, like pref shares and debt at favorable rates and all these financial engineering structures. They're going to utilize those strategies and those tools in an effective way to increase that Bitcoin per share, so that over time my yield in Bitcoin terms is going to keep going up. So that is what you're betting on. So you should be looking at a team that has that capability, has access, has the expertise, that is serious Bitcoiners who understand it, are not going to panic sell, sell the bottom or something like that. And then the third aspect is, so there's 3 aspects to it. One is just market sentiment. Okay, so if it goes up, there's like FOMOing, it's going to go up. BTCTs will go up faster than Bitcoin itself. The second thing you're looking at is the quality of the management team and their ability to deploy, all these tools. And then the third aspect is actually a structural aspect. And that's also super interesting. So for example, it's like tax reasons. So is a BTC-TC more favorable from a tax perspective? Can you put it in your ISA while you can't put your cold storage, Bitcoin in your ISA? Many jurisdictions there's all this pent up demand and there's just no outlet, right? So again, that's another reason. By having a Bitcoin treasury company, you can benefit from that those structural aspects for as long as they last, right? So yeah, I think that is the way that I think about it. And I think, yeah, these are the kind of metrics these are the types of, kind of aspects that you should be analyzing when you decide whether or not to buy a Bitcoin treasury company. Yeah.
Yeah, that's very, very similar to the advice that I give anyone else that's coming and asking me what they should do. But have you seen anything? Because around, like, I see them as real vehicles. And forget like the investment side of things with them. Like, I see them as vehicles for education as well. Because I'm seeing a lot of people come round to the idea of Bitcoin because of them. Are you seeing any of that as well in the circles you're in? Or are we still too early to be seeing?
Yeah, I think we're still too early. In fact, I was just saying this morning that I think the market is really testing the Bitcoin treasury company thesis as we speak. I mean, I saw that Metaplanet has just gone below a 1 times MNAV. So we're really being tested right now. I think the sentiment is rock bottom right now as we speak. So we'll see how we come out of this. I'm still bullish on the overall thesis, but it'll be interesting to see how we come out. And I think there will be a lot of cleansing of the space. But to your point, yeah, I mean, I agree. Again, there's nothing better to focus the mind than either making a lot of money or losing a lot of money. So if you bought some BTCTC and it did like 100x or something, you will have definitely picked up the Bitcoin Standard or some other book, and you'd be reading about what the hell, like trying to understand it better. And equally, if you bought some and it's now fallen 90%, which has happened in most cases, you're wondering whether to dump it now or to hold on. You're going to be forced to like read up on it and study Bitcoin and understand the underlying asset, right? So yeah, I mean, I think just exposure, just having it there, in the mainstream is always good.
Yeah, I agree. But it's just very interesting watching it all play out because we don't know. Which thing that excites me, someone put something on Twitter, I don't have it to hand, but it was like the people who don't get as much fear from the unknown are the ones that will go further or something. It was along those lines.
Yeah.
But it's exciting going into the unknown and testing out these theses. Is that the right word? I wasn't sure. And
I think, it's fortune favors the brave, right? You have to, and it's kind of high risk, high reward. There's like if you always take the conservative option, you're never going to expose yourself to those, really high return opportunities. So you have to be comfortable with the risk. You have to be comfortable with uncertainty if you want to generate those outsized returns. So,
yeah, and a big thing for people, because I have seen this in the space as well. A big thing, this is me just throwing it in there for the listeners, maybe aren't well versed in the whole space, is like the Bitcoin treasury companies aren't the same as you holding Bitcoin. As you said, I just want to make that clear, because I have seen in some cases a bit of confusion of I own this much Bitcoin, but it's actually I own this many shares, which is there just needs to be a little bit more education around that side of things.
Yeah. Oh no, 100%. Again, if you own a Bitcoin treasury company share, you're not benefiting from any of the political aspects of it. You're not benefiting from censorship resistance. You're not benefiting from unconfiscatability. You're not benefiting from permissionlessness. All these are the core properties of Bitcoin, right? You're only benefiting from its price, appreciation, which is great. So it should be a portion. It could be a portion of your portfolio, but not everything. Then you've kind of really given up on the core idea of Bitcoin, right? So yeah, I completely agree.
Yeah, and I like that 80-20 split as just as a number to throw out there, because if you understand Bitcoin, you understand the thesis behind what these treasury companies are doing. But that is us. We've hit an hour, so yeah, it's been amazing talking to you and having you on the show. And I hope we will do this again.
Love to.
Yeah, early next year or something. It'd be great to have you back on.
Yeah. Well, you had some really good questions, and I can tell when someone is a real Bitcoiner who loves the Bitcoin and the space and talking about it. So yeah, definitely really enjoyed the chat.
Yeah, likewise. Yeah, I will see you in Derby for our next conference. So everyone listening, if you don't have a ticket, go for it. Go and get one. Vijay, thank you very much for jumping on.
Thank you, Joe.